Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what exactly happened in the market during the day and try to learn something from that to plan for a better trade for the next day. So we will go through pretty quickly because there's nothing much to talk about when the trend is very clear, right? So it's a weak market, that is unable to sustain or is unable to retain that the gains that we had in the last Friday, specifically. So this is analysis for October 4th, Tuesday, 2022, and the price patterns. If you look at, let's jump into the charts and see what exactly does it say. So Nifty charts, the candle that you see here is it's bearish, wide range bearish candle, right? And it's a wide range in the Banknifty also, bearish candle, but it is very much inside the engulfing pattern, right? So any candle which is an inside bar is considered to be consolidating overall, if you see. So as long as the price has not reached the previous day's low, it is still consolidating. But the fact is that the markets are weak and market has lost 1% and 1.5% Nifty and Bank respectively. A lot of resistances on the upside, including a gap that's there immediately at the 17,300 nearby range and 39,400 that range, where the market had slipped up. So the hope was that the market would take away that and then move further, but it never happened, as it just remained a hope, not the reality, when the trend is clearly on the downside. Look at this. We have that trend line on the Bank Nifty, which is a rounding pattern top, met with the resistance, and the third week also we're going down. Nifty also, the fourth week we're going down, reconfirming once again and again the bearishness. And that's the thing. Let's specifically go in the numbers and see. It's 207 points lost in Nifty, 602 points lost in Bank Nifty. Intraday was kind of 1% fall. It was more volatile in Nifty and steady downtrend in Bank Nifty. That's what it is. Nifty was more strong. It was not ready to go down, so it climbed up, recovered the 1% where it had fallen down in the morning because of the US market falling 500 Dow Jones. So that bearishness was there, reflecting the SGX, and then it fall gap down 1%, but it was recovered almost more than half, 60% or 70% of that was recovered. But then from there it went 1.2% down. Bank Nifty, it was trending down, although it was very volatile. VIX was more than 20, so definitely volatility will be there. That's one thing. Double top pattern, M pattern that we are talking, is still there in both indices. You can see that. And all the moving averages are history in the Bank Nifty, 20, 50, 100, 200, everything is above. There is all bridge and able to climb above that in the daily charts. Bank Nifty still holds the support of the 100 and 200 still. So it's just below the 20 and 50. So at least moving up, Bank Nifty showing strength in that aspect. Bank Nifty and Nifty both, we have seen that it's below the trend line. So overall bearishness in the price patterns is what we can conclude. The only thing that we can hope for is probably there may be a CIP bounce that could happen at the support zones on both indices. And since these are all support zones which are previously resistances, right? And support resistance level, make a note of this. There's not much change because it is inside bar. 17,161 resistance upside, 17,292 resistance upside. Nifty supports 16,650, 750 has got a good support. One is a gap, another one is a previous swing low. 360 also is a gap support further down if that breaches. Bank Nifty is 39,413 is resistance upside, 39,759 is resistance after that previous swing high. Supports 37,250 is a swing previous swing low, and 36,808 is a swing gap. So 37,000 breach and 16,650 breach may be trouble. Right. Trouble in the sense the bearishness is not going to stop it. There's not even a hope for a consolidation, is what that would mean. Already bands has been expanding on the downside, both we have seen that multiple times, and it continues to be that. There's no contractions indication anywhere. It's having bearish bias for sure, and on the downside. Momentum was clearly bearish. Banknifty was holding that momentum from yesterday's move, and that is a good part, only good part that you can say. Only hope for the bulls. This is a range shift, and the momentum has shifted the range from the bear zones and then settled at a support zone in the RSI 40 levels, which is bullish in nature. There is a good possibility that it can bounce from here. So momentum wise, Banknifty has got a momentum range shift concept. Right? If you're not aware of that, check the video playlist. We have technical analysis series would have that. Right? So you can see the Nifty has lost the momentum on the daily, but Bank Nifty has retained that in a beautiful way at a support with the range shift. That's it. And so overall bearishness is what the indicators and the Bollinger Bands are again. Trend has also crossed over already last week. It remains to be the bear zones in both, and it is having weak strength. The bearishness is not very strong, so it remains in that bearishness in Nifty and the Bank Nifty on the short term. We suspect again 21 plus. We had fallen close below the 20, now again 21.3. Extremely cautious. Right? Futures why short build up. Bearishness again. Open interest is put call ratio is lost. The bullishness above 1 is gone. 0.68 and 0.687874. That's what it indicates Nifty and Bank Nifty. So 16,000 and 7,000 is the wide range for the Thursday expiry. That's the range where the highest put and call writing is seen. 37,000 and 40,000 is where the Bank Nifty's highest put and call writing is seen. Support and resistance of October 6th weekly expiry. Sectoral watch, nothing much to watch except that all of them lost 1 to 3% of price erosion has happened today, and the only stock that is performing is Bank Nifty. And also Bank Nifty is the only sector that is having bullish momentum among all the other major sectors. So except pharma and FMCG, none of them, all the others are in bear zones in the momentum perspective. So that's a worry. Across the sector fall is what you are seeing. Some reason the defensive sector pharma is holding, but IT cannot hold. Pharma also has got US impact, so the US market is correction. Would the pharma or the defensive stock hold or not? We'll have to wait and see. Interestingly, Fyers were buying today 590 crores after 8 consecutive rounds of heavy selling of 2000 crores plus each day, which is a relief. Don't know why or how that happened when US market was falling, crashing, and there's some buying that is happening for some strange decision by the firm. If that sustains, well and good. But they has found that opportunity to sell and then sold out today. And that selling was 423. There's a mistake. That selling was 423 crores in the cash market also happened. Crude oil is rising again after taking a support of a crash. 4.5% of up moves happened today, and then it still has an 83. Some relief is there, but I hope this does not spike up further from here. Then we'll have blow with the dollar also rising up. So dollar is rising up. Anything, some pullback has happened. Some flattishness you can see. Pullback 112.6. Remember it had hit the 114 levels earlier. Now some relief. USD and currency pair is also rupees the lowest ever, all-time low 81.7 near to 82 levels. So USD is rising, although the momentum was cooled up a little bit, but positive has multiple zones from the momentum perspective. Gold has also crashed just like the oil and then taken a support and then seems to be bouncing back. And now we are the first resistance is up above there, so that it will clear or not, that's what we have to watch out. SG is green as if now using is also showing green. But you have to check this tomorrow post-market, pre-market, on our time, our pre-market morning early. You have to see whether big falls has happened in the US indices or not. So today also we had opened a little bit green, not that big crash, even though the US indices were very low, very bearish. We did not fall that much, but finally we ended up losing 200 points, right? So if there is big fall that is happening there, there's every likelihood that our markets will obviously impact, right? No major events except some US market PMI data is coming in, job plus data count, some Fed speeches and all that there. So already can be expected. Keep a close watch of the US markets, whether they will do Once you support anywhere, is going to continue like that crash. Look at this. Why do we talk about US markets so much is because it has given up and closed below a major support zone. But today some green is seen, is it trying to retain that support or is it going to? So any low below the 28715, the low of the previous candle, would mean that we may be falling down further, because the next support that could be seen is way down here at 25. There will be big fall. That's where the next support is there. Until then, right? So this is what, if it is consolidating zone, then it's okay. So that's not the major, no major events to stay here. Stock picks 2, and they are Oracle Fin, both the shops, they are on the short side, and Pyramid Enterprise also is on the short side. Oracle Fin Services, it is having a head and shoulder pattern. It is in the neckline. If there is breaching, then we have a short swing opportunity there, which could go very long without any support. Keep a close watch. Only if you get a signal of a breach confirmation, then only entry has to be on a daily charts. Momentum is bearish on weekly. Trend is weekly. Trend is also bearish. So that's what OFSS. Another one is Pyramid. Pyramid Enterprise is a pharma stock and also financials. It's diversified basically, and it is having clear bearishness, and there is a divergence is there. You're cautious on that. It could give some up move from here, but the thing is, it has breached the head and shoulder. Right? Just like it is already confirmed to have breached, and entry to the right time, and it can give 1:1.5 kind of risk reward. If it goes down to the 570 kind of loss. Keep a close watch. This is the weekly charts we talk about. Momentum and the trend both, and the price pattern is all bearish. So Pyramid Enterprise is short, and Oracle Financial Services also short. Just to wrap up for today. In the sense, back up for the market analysis summary, the verdict or whatever we call it. So we had a 10% correction, Banknifty, and 7% correction from the top in the last swing, rally that happened. 20% or plus kind of rally happened. But with both global cues, we had corrected 7-10%, and now it's trying to bounce back. So it was weak. Today's market is weakness, unable to sustain the levels, is what, unable to hold on to the gains that happened. So that is what we see here. So it's weak. Basically, that is what it is. The market is weak, and the price patterns, the momentum trend, PGR and VIX, all of this is showing that they're in favor of the bears. So market view for the next day remains mild bearish, right? And probably the Banknifty may move because of the range shift advantage that it has got right now from technically, and the US market, if it is trying to bounce up and then bounce up in the breach and then try to climb back, then it may impact. There is a possibility, but all the charts are saying that it's bearish. So there is mild bearishness. And why mild is because it's got good supports, and the market is resilient. Fire monies are coming in. Retail confidence are still there in the market. That resilience, when the entire world is crashing, we managed to hold on much stronger from the economic point of view, right? But the fact is that the rupee is below 80. Global uncertainties are there. Dollar rockets up to the 82 kind of, taking the rupee to the 82 kind of levels, and dollar is shooting up every single day, 114 plus dollar index, and mix is about 21, 22 kind of level. So uncertainty is there. Levels is all that you can watch. 16,650. Not 500, 650. I've got good support on the gap, and 37,000 are the two levels that we can watch out for. See out of the trade if the VIX is not cooling off below 20. And that is one trade by itself. And if you have to trade, always remember to hedge your positions with to sustain the overnight risk that could happen. Right? Today we have the news about some banks, prospective banks like Deutsche Bank and Credit Suisse that could go bust. Right? possibilities or rumors. You don't know what all this. That so even if it is true or not true, the market could react violently, and then your capital can be wiped out if you're not hedged. So the first priority is to manage the risk and portion size properly. If you're trading, if you have to trade when the VIX is above 20, if it is mandatory for you to trade, if you're an expert, trade in, but cut out your portion size so that you're there in the market and you don't need that much time to recover, even if you get hit by the losses. Hedge the portions, manage your risk well. That's all we can do, right? We cannot predict market. We can only talk about probabilities near the resistances and supports. Right? Play safe and happy trading, happy learning. If you're not subscribed, definitely subscribe and share it to maximum. We have few subscriptions, very few subscriptions, and appreciate the help in this regard. Thanks for watching. Happy trading, happy learning.